here. We bring in senior markets correspondent Kevin Green, taking a look at some of these levels. We await NVIDIA tomorrow. That's big news. But the market, which hit record highs on Friday, we saw record close for the Dow Jones Industrial Average. This week, there's been some pressure. And we also have, by the way, folks, the MSCI rebalance here. So there'll be some heavy volume at the close here. The traders are prepared for that. And good morning to you, Kevin Green.
Good morning, Nicole. Yeah, a lot on the calendar for the remainder of the week, and we are kind of gyrating here a little bit if you're kind of looking at the price action from yesterday and even this morning. You're seeing around 30% of the stocks in the S&P 500 to the upside, and it's kind of mixed when you're looking at the risk-on, risk-off sentiment here. You do have healthcare kind of outperforming to the upside here, but you are also seeing some risk-on sectors catching a little bit of a bid, especially when you're looking at the semiconductor space as a whole, which is going to be a key driver for us in today's session. Now, if we're kind of looking at the levels, I would say I'm not saying that we're in no man's land, but we're at a critical area here where we are starting to make lower highs as well as lower lows since that Friday move to the upside, which was obviously fairly aggressive. So I do have a line here at 64.30, which is going to be a key area of support to the upside, is your area of resistance, 64.50 for today. And then to the downside, we actually have two levels to really focus on. If we do get any type of further flush, maybe some news headlines hits the wire here today, 6,400 is going to be your first critical area to be able to hold. Hopefully some buyers step in. If not, 63.70 is going to be on the radar. We actually have seen some put flows over from yesterday as well as today or this morning that have shown up at that particular level here. So hopefully we are able to kind of get some buyers to really step in, stop this kind of trend of having lower highs and lower lows since this move that we had on Friday here. And we might have another kind of range bound day. Yesterday was for the most part kind of range bound until we got towards the end of the session where we closed for the most part on the lows here, which is not really a good sign. But obviously, once again, we have a lot that's going to be on the calendar today as well. What could be a factor for us is going to be consumer confidence, which we'll have that number out in about 28 minutes or so. Keep your eye out on the expectations of the consumer moving forward, as well as the current conditions or the present conditions. There has been a little bit of a divergence there, and if we actually do get a better than expected consumer confidence print, that could also give us maybe some fuel that the market could try to rally off of those numbers.
Yeah, understood. So we'll watch for the confidence print shortly. I was talking about the steepening of the yield curve, and we see the 10-year right now at 428, but there's been so much talk this morning about the shorter end, looking at the 2-year, that we're seeing the shorter end coming down while the long end is rising. Some of your thoughts on what's going on here?
Yeah, you're continuing to see that spread widening out, and that's not an anomaly. That usually does happen, especially when you're starting a rate cutting cycle. I think the big question is how aggressive the Fed is going to be over the next couple of months. But if you're looking at the 10-year yield futures here, this is going to be a 3-year weekly chart to give it a little bit of a better perspective. We're making lower highs and we're also making higher lows, and we're going to be close to this apex. It'll happen around the middle of November, or actually early December or so. But even though we have seen bond volatility for the most part, especially on the longer end of the curve, kind of inch up here a little bit over the long term, if you're looking at the pricing aspect or the rate aspect of it, we're still in a consolidated range for now and expecting either a breakout to the upside or downside. Now RSI is still making lower highs at this point in time, so that's something to be mindful of also in one of this this triangle formation or this wedge formation here. And MACD is actually signaling that yields could go lower here. So yes, the spread is going to be very key, and no matter what spread that you look at, 2s, 10s, you can look at 3-month, 10-year, you can look at all of these different ones, but we are expecting shorter duration versus longer duration to continue to spread or widen out here, which once again is normal, but that also could create some headaches here for the administration that is trying to get the longer end of the curve to move down just a tad bit here in order to kind of spark mortgage demand and things of that nature and refinancing. So a very interesting chart, but at the end of the day, the volatility is still within range of what we've seen over the last couple of weeks, as well as the last couple of months or so.
And then also volatility, obviously something we continue to monitor closely.
Yeah, you are seeing. So yesterday we had a situation on Friday where we did see a crush in volatility. We did see it inch up here a little bit. But if you're looking at the vol of vol or VVIX, which is a measure of volatility on the VIX itself, we are seeing that starting to inch back up to the upside here, and it's creating a critical area of support. Usually, once we get down to around that 87-ish area. Now, if we continue to see this creep to the upside, you could expect that maybe volatility or the VIX index itself, measuring volatility of the S&P 500, could also creep a little bit higher. I think there has been a little bit of a sigh of relief when it comes to the Fed rate cutting cycle, but I think the economic data is still going to be a key factor for us over the next couple of weeks leading up to that meeting. And volatility, realized vol has been lower than implied vol. That usually does happen 66% of the time. Realized vol is lower than implied vol, but it does look, when you're just looking at the chart as well as the seasonality effect, that it is still relatively cheap compared to the events that we have on the calendar. So keep your eye out on the VVIX, which will be a decent leading indicator for overall market volatility over the next couple of trading sessions.
And last but not least, we talked about Intel and MP Materials and the names like Lockheed Martin and some of the defense stocks on the move today. Big story with Commerce Secretary Lutnick, right?
Yeah, the fact that the administration is looking at investing in defense contractors. Now, I believe his comment did state private defense contractors, but once again, you are still seeing some public companies really catching a little bit of a bid here. Now, defense has done a phenomenal job. We're looking at the SHLD, which is the Global X Defense Tech ETF. This holds the Lockheed Martins of the world, Palantirs, things of that nature. You can continue to see this nice trend at the upside. Now, it's flagging out a little bit, consolidating, trying to keep that 20-day moving average in blue, hopefully trying to hold that 50-day moving average in yellow. But the RSI is actually making lower highs as well as lower lows. So the momentum in price over the last month and a half has actually slowed down, and MACD is kind of in a bearish formation, still above the zero line, but you're getting a little bit close here. The technicals on the daily chart are kind of suggesting consolidation and potential move higher, especially if we get this news. But on the weekly chart, it does actually signal maybe some bearish opportunities here for defense technology companies. So an interesting trend, an interesting consolidation. We're testing the upper end of this range right now, and do we see more dollars being put to work in some of these companies here? That could actually be a catalyst to the upside, not only for the large cap stocks, which is really what this kind of tracks, is some of the larger companies, but there's also smaller companies, mid cap stocks that could be beneficiaries of this as well. Drone manufacturers, fiber optic cable manufacturers, and things of that nature, which kind of go under the radar when you're talking about defense stocks as a whole.
All right, Kevin Green, great to see you. Thank you always. Really appreciate it.